Hi, and welcome to another episode of Two Grey Beards. We're doing it on Friday, actually, the 10th of November, after the market close. And it's been an interesting week from certain points of view, although we had absolutely no data. What did you make of this week, Andy?
Well, the first thing I was focused on was how the QRA that was well below expectations that caused us to buy all assets was going to begin to play out with the bond auctions that happened on Tuesday, Wednesday, and Thursday. And I expected the bond auctions to go okay, and that's what happened Tuesday and Wednesday. But Thursday, we had a truly awful auction on the 30-year bond, and the market sold off. Equities and bonds sold off, bonds more so than equities, but equities sold off. And then Powell came on, and after saying an expletive potentially, then went about and said really nothing and didn't really push back on the rally post QRA of the long rates and the easing of financial conditions that we think has occurred. And so, surprisingly, the market stayed down. And then today we had a big rally in stocks and a sort of move in bonds, a little bounce on the long end and a little bit of a sell off in the short end. And so that was really the week. No data, weekly employment,
Yeah,
really.
no, I found it interesting that the 30-year was as bad as an auction as I have seen in, well, I don't know, 30 odd years, maybe even 40. Yeah, 40. And it bounced back fairly quickly. I think people realized that the yields were reasonably attractive. So on the week, the long end actually was slightly better, like 1 basis point or something. But
Right.
I think that all that the stock market is looking at, or looking for rather, is stability in the bond market. As long as we get stability in the bond market, we probably have, as we've discussed, the probability of a seasonal rally into year end. We will see if that happens. I think CPI and PPI next week are going to be absolutely key to see if that can happen, if that narrative can go ahead. But I think that we are perfectly comfortable. We got in when we wanted to get in on the back of the QRA, and now we just watch the market and watch for news and then decide what to do.
Yeah, I my work has shown that this is not the type of year that we get a year-end rally because of the its narrowness and the amount of taxable losses that can be taken to offset taxable gains. But that depends on if people want to chase and they want to chase the Mag 7, which they have, the market can rally. So I'm probably a little more pessimistic about the year end than you may be, but we got into equities and bonds, etc., on 1031, and the Nasdaq's up 7.7% in 9 days, and the S&P's up 5.2%. Bond yields have fallen 31 basis points on the 10 years. That's a pretty healthy rally, and frankly, all I would have expected for the post QRA rally in assets. And so the question becomes, what do we get from here? My view is that this is not what the central bank wants to see interest rates low, long-term interest rates lower, and short-term interest and stock prices substantively higher. But they may not do anything about it. That'll be the
No.
question. December is coming. It's a 90% chance that they're going to pause again.
Yeah. No, I think that's correct. But the markets always overshoot. And if CPI and PPI and retail sales, which are on Tuesday and Wednesday of next week, are reasonable, and that takes the Fed out of the equation for December, there are probably a lot of people who are underinvested, who don't own the right stocks, who are underperforming their whatever index they need to beat or match, and therefore they might just chase on the back of nothing else but liquidity. It's
It's
always a possibility, and we will
certainly
know.
it's certainly the most popular path, and the path that most people that study these types of things expect. That will be what will happen, which will cause a chase in the top stocks and a rally in equities. I just would say that I'm a little suspicious of that, and I think some of that has happened in the last few days, and so I'm a little bit suspicious. But at the same time, there's no obvious catalyst that's going to prevent it, and that's the question, which is, at this stage, we're fully invested, essentially fully invested. And the question is, what do you do about that? And do you start taking profits? We'll see. I think it depends on the data. And I think we're going to do what we've done in the past, which is update you along the way as we get the next couple of days' data.
No, absolutely. As I said, I think that is going to be key for the next several weeks because, as I said, if the Fed is out of the picture, then animal spirits might resurface. And as you said, the Fed, what are they going to do about it? They're
No,
not going to hike just because the S&P is another 2, 3, 4% higher.
no.
So it's one of those. It's going to
Yeah.
be December. It's going to be thin. People are going to chase. We will see. We'll know the data very soon, and we'll send you an email if we need to do anything.
And in terms of the auctions, next week is none, basically. And then the following week is Thanksgiving week, which is going to be light. And then there's going to be quite a bit of auctions at the end of the month. We have 2 weeks of not much.
Exactly.
So it's going to really be the data. And in my personal view, I think the data is going to be on the soft side just because we had this sort of significant tightening in September. And we're coming off of that. Plus, energy has been down a lot. So we'll see how it plays out. But we're in a good position now. We like what we own. And if things change, we'll let you know.
Absolutely. We still have about 6 or 7% cash. We might deploy that depending on the numbers or not. We will, in any case, send you an email either Tuesday or Wednesday.
Absolutely. All right, Nick, thanks. Have a good weekend wherever you're heading.
I'm heading to Arizona. It's going to be fun. I've never
Enjoy
seen the
yourself.
Grand Canyon. I
Oh, you're
intend to.
going down there. Great. I could see you on a burro.
We shall see. Okay. Bye bye, everyone.
Bye.
And on to the positions. Well, obviously they haven't changed. What we did as we emailed you is buy back all the short calls that we wrote for the week. We actually made money on them, fortunately. We basically bought them back for one reason only, because they were all at the money and we would have been called away on a lot of positions, and we don't want that. We think this allocation for the time being, until we get the data on Tuesday and Wednesday, is perfectly appropriate. And we might actually even get rid of this cash and allocate it more into equities, so we are overweight in equities compared to bonds, depending on the data actually, because we think there's a decent possibility of a Santa rally that makes no sense, but we might as well participate into it. Whenever I have cash, I keep on buying a few shares of the USFR. So I try to keep as much cash in USFR because it's higher yielding rather than just the cash sweep. There's a difference of at least 1% there. So I'm trying to maximize my cash. And how would we, if we needed to, allocate more to equities? Well, we have really two choices. We can get rid of the STIP here, the very short-term Treasury inflation protected, and allocate that to something like QQQ, or we could change the balance of the QQQ versus the DIA and the SPY, because all the action is in the NASDAQ. Or we could reduce something like SHY, because even if the Fed is on hold, that really doesn't mean that SHY goes anywhere at all for the next few weeks or months. So we shall think about that and write you an email on Tuesday and or Wednesday. The broker statements are all updated. They're all here, basically reflecting what I've just shown you. And the order entry, I've written here that we are not doing anything, but we will send you an email. Have a lovely weekend.